Your reflections on the CPI print, and I guess the market's reaction as well. Some have argued that some of these stickier, more persistent components were surprising. Others are arguing that it's exactly what the Fed chair told you would be happening, and at least in Jackson Hole.
I think it was a wee bit surprising. You know, I've been coining for decades Blinder's law of speculative markets, which is the market generally gets the direction right and then exaggerates the magnitude by a factor between 3 and 10. I think that's what happened this time. It was bad news. It was a little worse than we thought. But, you know, what was the miss? The miss on the CPI, markets were expecting, I think, like 8.1, and they got 8.3. This is not the end of the world, although it was, you know, negative inflation news. Absolutely.
Yeah. I mean, I think certainly the hawks would point to rent and the pace at which it's climbing. Yes. Highest in 40 years, and core in general. I mean, only a handful of times has core beaten estimates by 0.3 or more.
Yeah. No, it was bad news. I'm not denying that. It was absolutely bad news. I've been hoping for some time that around now inflation would turn down. And you know, technically it's turned down, but a tiny bit down. I mean, I was hoping for a larger turn down than what we're seeing, and the markets reacted negatively to that news, which is, you know, a rational reaction. Like the markets,
Alex.
I think. Yeah, go ahead.
Oh, no, I was just going to ask you, since you recently studied, you know, you've done a deep dive into the history since the 60s. A lot of people have been analogizing the current environment to what was going on in the 70s and the 80s, perhaps. Do you think that's an appropriate analogy, given just the, you know, some significant differences back in, you know, that time period? We were looking at maybe 11% rates versus where we are currently. Is it an appropriate analogy, just given how much the world has changed?
I think it's easy to exaggerate the analogy. There are some similarities. The most obvious one is that we're looking at the highest inflation now that we've seen since back in the early 80s. But if you think about just go back to 1979 and the situation inherited by Paul Volcker, who finally then broke the back of the high inflation. We had high inflation for like 13, 14 years. By the time Volcker took over, it was highly ingrained. One thing people forget is this inflation is still young. We've had high inflation now for about a year and a half. Go back 2 years, we were looking at below 2% inflation. People remember that. It's not like they think 2% inflation is an impossible world and 10% inflation is the world we live in. That's what people thought in 1979-80. Very different from what they think now. And you can see that in objective measures of inflationary expectations, such as the TIPS break-even rate and in other things.
That's pretty fascinating, especially when you think about what Powell said to Cato Institute the other day about inflation expectations, and that was, yeah, they're low, and they've actually come in a little bit, but in a sense, the longer you let them fester, they do become a bit of a time bomb, right?
Yes, and that's my point. I mean, by the time Volcker got into the chairmanship of the Fed, they had festered for a very long time. And that's just not true now.
Alan, pretty fascinating, obviously, as a bunch of people trying to make a call on the September meeting. Congratulations on the book. Look forward to talking more about it. Thanks.
Thank you.